welcome to another video. So I'm quickly just gonna share this video out, but let's capture the stream. I hope you're all doing well. Excuse me for the share. I'll just quickly tweet that out. So in today's video we are going to be checking out some of the news events. The market seems to have now turned around for a little bit of a downturn. Interestingly enough, we are about a week away from the next Fed announcement. It is tends to be very bullish when the market dumps down into the Fed announcement. We know and expect a 50% basis point the next Fed hike. Remember, that is stage one of the Fed pivot, where they start lowering their interest rate hikes. Step two is the finally stopping. Just need to put that fan off. And then the third step obviously is the loosening or the reducing of the Fed rates, which tend to coincide with a market dump. This is to get the large institutions a chance to leverage up their positions. I need to pause that. Also get to take out loans at low interest rates and to go long on the market. But the more reasonable explanation is that the market is crashing, right, and the Fed then reacts to that crash. So a major escalation in the conflict in the East strikes within Russia. Now this, I thought, maybe could be an escalation in the conflict. The president of Russia is I'm trying to be as, because I don't want to get a strike on this channel, but to be as careful about my words as possible. So back on my old YouTube or Twitter channel, I actually called the invasion back here when we popped out of, because we had this massive market structure forming. Now this is Lockheed and Martin. They produce some of the most advanced weapons in the world, right? And when we finally broke out here, and this actually led the market, I was pretty sure that the invasion is going to happen, right? Now, which is quite interesting to see, let me just make sure of this, 93. So it is technically a little bit higher, but on the daily, this is bearish divergence. So what I'm expecting to happen is maybe a de-escalation in the war, because this hits a little bit close to home for Russia. This I thought could be the reason for the market dump, but generally, I mean, this happened 3 days ago. You had this bullish divergence, so the market tends to lead bad news, right? So I've just been looking at the crypto news, including the Jim Cramer call yesterday. The news is so overly bearish. Like, look at this at Reuters, right? Cryptoverse, forget crypto winter. This is a crypto bloodbath. And I've just been going through some bullish news today. Crypto's horrible, no good, very bad here. When the news, like you guys have probably seen that video where it's a compilation of news and they all say the exact same thing in a coordinated effort, right? So I'm just thinking, like, this is another one. This is ABC News. Forget crypto winter. This is a crypto bloodbath. I mean, this is the exact same headlines, just a different, because Reuters had the exact same title here, right? So much bad news almost everywhere. It was savage. Jim Cramer urges investors to exit crypto. crypto casino. Anyway, so lots of bad news in the market, and it's just funny to see. So we've been talking about these massive divergences. This is the dollar index, right? The RSI, bullish divergences here. So a reversal for the dollar, and we found support on the 38.2. This is called the pump chaser zone. So after a massive pump like this, if it comes back to the 38.2 and finds supports there, this tends to be a continuation move to the upside. But we'll have to check it out. Remember, this shows a risk-off environment, which means that crypto and stocks will tend to suffer a bit under the pressure of the powerful dollar, right? Or hopefully, we really want this to stay below this downtrend, right, and continue down, so we can get a bit of a relief. And we want the Fed to start pivot, right? We've pretty much, let me see if I can pull this up, CME group interest rates. So this is the graph that shows what the chances are of them pivoting, right? So the next interest rate hike is in 7 days. This is the website here. So it's coming down a little bit. Last time we looked at it, the market was 80% sure that we're going to get a 50% basis points. Now it's come down 3 more percent, which isn't great, right? This will put us at 4.5% interest rates, right? So the dollar showing a little bit of strength, but this is to expected a week before stage 1 of the Fed pivot, right? So a little bit of a sell-off right across the market. Let's pull up crypto bubbles. We could have seen it happening yesterday already. Let's pull up the dominance, as the dominance is the only thing that's rallying in the bull market. We've seen these bullish divergences. This is in fact hidden bullish divergences at the bottom, and it was just showed that the altcoins are going to suffer a little bit against Bitcoin. Now, the altcoins suffer against Bitcoin when Bitcoin runs aggressively to the upside and dumps to the downside, as people, because the altcoins tend to sell off a lot more than Bitcoin does, so people put their crypto positions back into Bitcoin. We should always also quickly look at the stablecoin charts to see if we have a top here yet. So the US dollar coin has been in this little downtrend, although it's not as powerful as US Tether. This only has 5.4%. Now this obviously means the amount of stable coins that is circulating in the market. When this goes to the upside, you would expect people leaving their crypto positions, which generally means crypto is going down, right? So not much we can see there. We're still consolidating. Let's look at what the Tether dominance does. Tether is still the overwhelming most popular coin in the market. No real divergences to speak of because we didn't make a new high here. This is the weekly chart. So this is simply just consolidating, the opposite of what this USDC stablecoin is doing. What we want to see is we want this to come down, right? As people leave their stablecoin positions to go into crypto. Let's reverse this. I mean, this does look like a double bottom, right? This is a reversal candle or a reversal pattern, and it was, yeah, this is pretty much picture perfect double bottom. And all I've done is I've just turned on this chart, this is a double top, right? We can see this come down all the way to 4%. A little bit toppy. The market is not telling us much, right? Okay, so if let's quickly see what ETH is doing, as it's selling off a lot more, but it looks really good. It's just sitting in this channel. But if this pattern were to break, we do have a measured move, right? So this is like an ascending triangle, right? Your measured move is from the high to the low of the... Let's just remove this so we have a little bit more room. You can get your measured move wherever this breakout happens. That's not right at all, from the top to the bottom. It can't be. Why am I getting it so low? I'm doing something wrong. It's not supposed to be this significant, right? Dwarkov check is down there at 300. So ignore this. This is definitely wrong. Hopefully we don't break below this triangle, because this will take us down to these lower levels, right? Total market cap. This is all of the coins except for USDT, right? Or the stable coins. But there is a lot of space down here. I'm just putting up the bearish targets. It does not mean I wanted to go there, right? But this is practically what Hex has already done, right? Let's cover some of the... Yeah, let's check what Crypto Bubbles is telling us. So this is the daily chart. So pretty much everything is red. I mean, this Trust Wallet coin is doing incredibly well, right? This is like a MetaMask competitor, and it's just so bullish. It's just been going up. This was the FTX collapse that happened here, and self-custody. I mean, the narrative for self-custody has pretty much gone viral. Everybody is now learning about taking possession of their own coins. I see Ledger. You can. I think it's still in the description of my videos. Ledger created a new hardware wallet. I wonder if it's for sale. Yeah. So this Stax is almost like a smartphone looking one, and I wonder if you can get it already. So I must say, oh, so it's on pre-order. It looks pretty cool. So you can actually view your NFTs on this. Let's see what the pre-order looks like. 230, so it's not bad actually. I suggest you guys get, if you want a hardware wallet, get two. So if one breaks, or you lose one, you still have the ability to use it, right? But remember, you can always, you can still import 24 words into your MetaMask. Yeah, you can pretty much use a hardware wallet on any platform. But it's cool to have to, then you know you also imported your private key correctly, or you wrote it down correctly. You should always write it down on two different pieces of paper and compare it before you accept it, right? Yeah, so this looks pretty cool. Ledger unfortunately did leak email addresses, but they have by far the best security accreditation. I think I'm pretty sure about that. So overall market selling off pretty violently. I wanted to take a look at some of the Hex ecosystem coins. So let's, I mean, Hex is just moving along. The next target, I want us to find support at the 61.8, because this was technically a good buy down here, the 28th of November. Let's put on the stochastic and just quickly take a look at the weekly. So the momentum is running out a little bit, but this can turn around pretty quickly, and it does reach the bottom quite quickly. What you guys can see here is that this weekly stochastic RSI has crossed, right? The last time we crossed bullish was back here, right? June the 13th. So this was back here. And then we went on a nice run. I think this was 70% when this finally printed. Yeah, so a nice 100% move the last time. And I'm measuring it off the close of the candle, because remember the indicators only print when the candle closes, right? And that's a weekly candle. So it printed there, and then we had this nice run. So let's quickly go to the daily. So we're practically, we didn't, I mean, we can consolidate a little bit before taking off, right? So we had this little consolidation and then off we went. So a little bit more sideways movements before this plays out. This was technically a nice bottom until we get like up here somewhere. Maybe a bit further into January, the mid of Jan. We might make a local top again. You can see, yeah, I don't want to do forward-looking statements right now, as it's pretty bearish right now. But I want us to find some support at the 27 level, the 61.8, and then maybe a measured move. If we find support there, all the way up to 3.6, that will take us right into resistance. Yeah. Okay. So a nice little higher low here, somewhere inside of the reload zone, and off we go for a local top. Let's look at Hex versus Icosa. I need to remove this one. What can we see here? Higher highs. Yeah, so this is bearish divergences up here. You can see that the price is going higher, yet the indicators are going lower. So Hex is overvalued versus Hedron here. What's the weekly doing? Pretty high, right? The RSI is only printing now. So Hex very overvalued versus Icosa, and this is just the reverse of that chart. So Icosa undervalued versus Hex here. We had these massive divergences on the RSI all the way from back here already. See price going down, right? Yet the indicator, so that's bullish divergences here. So I mean, Icosa looks pretty good back here, back down here. Like this was the perfect buy signal, the 3rd of December, to swap some Hex for Icosa. Let's look at Hedron. Do we have bullish divergences here, price going down. So Hedron seems like it's going to catch a little bit of a bid, and we have on the stochastic, we have divergences. Let's look at Hex versus Hedron. So could Hex be topped over here? Pretty high. We've gotten much more oversold in the past. it could be making another Hex making another move against Hedron. The weekly still very low on the RSI on the weekly. I mean, so Hex can be a lot more powerful than Hedron for quite a while before this needs to turn around. Although the stochastic, the momentum is starting to run out. But I mean, this can move along here for quite a while, the stochastic. Hex dominance up 2% on the day. So Hex is holding up pretty well versus, so how much percentage point is this in one? Up 2% also. Let's see what it's doing on the weekly or on the daily. So Hex is holding up pretty well versus the rest of the market. Okay, so no divergences. This Hex dominance is simply how much Hex has of the market share, right? You're gonna hear my dog snore again as he's just coming to the room. So please excuse that. Let's see what you guys are saying. Pearl, what's up? How are you doing? TW01, good morning to you as well. Yes, we have heard. It's probably because of the Russian news. Hey Zeus R, good afternoon Hans. Dollar on the way back up. It does look like the dollar is on its way back up, yes. These are clear divergences, and the weekly has quite aggressive divergences here. See price going up, right? And from here it's going down. Oh, that's ugly. That's lots of power in this move. Dollar on the way back up, yes. Have you heard about the death cross relating to Bitcoin? The death cross is the 50 and the 200, right? Can pull it up for you. Let me just remove. You need two. So one is the 50 and the 200. I'll Google it just to make sure that it is the. What is the death cross? Death cross is a technical analysis term to describe when the short-term moving averages pretty sure it's the 50 and the 20, right? Yeah, death cross appears on the chart when the stock term, usually the 50 day, so on the daily. So it hasn't crossed yet on the daily. Let's see what, still hasn't crossed, but pretty close, right? Let's just change the color so you can see it a little bit clearer. This was the death cross back here, so this is the golden cross. The golden cross is the opposite of it, if I'm not mistaken. Yeah, so the golden cross is the opposite of the death cross. So you'd had your death cross back here. There was a death cross back here, but we all know that this high was pretty weird, right? The last time it happened. Golden cross back here in April. So I mean, we're pretty close to these areas, right? For the market to become bullish. I mean, we're pretty much here. If we just go off what's happening today, probably down here in this trough, because we're not at a peak, we're like mid-range. Well, let's just see if we found, no, we're below all of these indicators. We're below the 15 MA right now. Yeah, we're below it. I mean, this could be quite bearish, right? But it's a lot different than it's this time. So let's go back to Bitcoin to see what it looked like. Death crossed back here when the price was at 9,000, went all the way to 3K. Then you had your bullish cross in April, and by then we were already above it. But the price action is below the 50. So if not, if I can find the video, I'll send it to you whenever true or other. So there it is. It hasn't crossed yet. Pretty bullish when it crosses. The golden cross happens, but the death cross has already happened a while ago. Let's look what Hex is doing. The cross looks like on Hex. Let's clean up everything. So we're below it as well. Hasn't crossed yet. We had our death cross December when the price was $21. So it saved you like 90% gains. Damn, pretty good. When did we get a bullish cross? So the bullish cross happened. It wasn't on the chart yet. Maybe I can pull it up on the version 1 chart quickly. 50 and the indicators. That's the 50 MA and then the 200. So let's see when this first crossed. So crossed 24th of September. Let's see what the measured move was of that cross up there. Pretty significant. So I mean, it's getting close, right? It's just a matter of time before we get these crosses. Let's try and predict when this might happen. Oh, it's going. So it looks like we might be getting this by the end of this year. It's saying the 31st of September. It's got a little bit more upside. Maybe the 29th. By the end of the year, it looks like we might get. It is my dog snoring. You guys should tell me if I should chase him away. Have you heard about the death cross? If not, Waitcoin had a big spike yesterday, but only lasted 1 hour. Can you check the chart, please? Yeah, let's see what happened there. I still haven't claimed my Wait tokens. It's pretty much worth nothing. I don't think I'm gonna risk like a few dollars for. Yeah, it did spike. So there's only 7,000 liquidity, but this isn't. Let's see if there's another pair with a bit more liquidity. So 7K on the ETH and 2K. So the ETH pair has the most liquidity. There's only 2K sitting in buy orders. This is pretty flat. This is a good market structure. You've got nice higher lows here. Let's quickly see what the RSI is. And when you get this pent up energy, if I pull up the Bollinger Bands, you'll see it was probably very tight and it just popped out here. Look how tight it was. It has never been this tight, and that's just simply what happens, right? If you pull up the line chart, you can just see all of these W's. That's just a fancy way of saying higher lows, right? So the RSI is moving up a little bit, so it seems like there's a little bit more upward pressure. Let me chase this dog out quickly. Pretty insane snoring capability by that dog. So yeah, we did have a little bit of a spike, but this was a good sideways trading, and someone put in a massive order. Maybe we can see who this guy was that bought this up. When would this have happened? Let's pull up the hourly chart. So this was only a few hours ago. "17 hours ago. 1600. Probably wasn't these. There is some buying coming into this now. I won't waste a lot of time on this. Just quickly see if we see the buy order. But I mean, he could have just put a limit order in there. It's probably this guy. So there are swapping hex for this. 3 million white tokens in this guy's wallet. But there's no buy orders in here. That's weird. Anyway, so someone is accumulating white token. I still want to see what this will be used for. I'm pretty sure like they still have something up their sleeve. Yeah. What's up, Pulse Lord? I enjoyed your video today, dude. Won't the CBDCs become the stable dominance? So JP Morgan and BlackRock already owns a large percentage of Coinbase and Consensus, which are the developers of MetaMask. So you guys should follow Identity Block on YouTube. I think he's changed his name currently. Also streams on YouTube, or yeah, does stream on YouTube. He has a Spanish segment as well. He's speculating that USDC is already the stable coin that the US is going to be using. So, I mean, the infrastructure is already built. Why not just buy it? They have all the money in the world. Yes, please hit the like button. I really appreciate it. Do subscribe if you enjoy these kinds of videos. Hub, what's up, dude? Hello, friends. Pulse, ASICs chart had a nice buy and a pump. Let's look at the ASICs chart. So ASICs, if you guys don't know, is the mining protocol for the Pulse Doge. So this one has the most liquidity at 30k. It has another pair with 25k versus Pulse Doge. So let's see what this chart looks like. Wow. I mean, the only thing, there was no divergences, except maybe if you count the wick, right? But I think this is the, maybe we should go to the daily. So a beautiful little W down here, and off we went. And a nice W there on the RSI as well. But the RSI told you that this was pretty much ready to go, right? There's so many charts to watch now. So we're just below the 50%. We just got rejected at the golden zone at the 61.8. Exactly at it. Pretty high already, but a little bit more room to go, right? So it's probably going to create a little M here and then go down. But this, it's too late to get it here, right? You either have to look for the indicators or wait for it to come down again to the reload zone. But in the long run, this might come down like this. This would be a beautiful market structure, a huge W for future performance to the upside. On that note, let's look at PLSD. Like I just saw on, I should really add this to my watch list. This chart just keeps on going, right? And I don't have any PLSD. Just once again rejected at the reload zone for the shorters. Let's see if we have divergences. Let's check out the weekly. And this looks pretty good, right? So no divergences yet. The RSI on the weekly just crossed up. Let's see what the volume is doing. Oh, this is good, right? A beautiful little W down here. I actually can't believe that this is doing so well. And look how beautifully it found support on the 61.8. So this is the overall reload zone. Just to remove some of the came right into the reload zone. This is a very good just going up. So on the daily, stochastic turning down, but this can move down there a long time, right? And the RSI has a little bit more room to go as well. But this almost created bearish divergences. If this came up a little bit more, it's got a lot of room still to go before it breaks this high. Otherwise you would have price going down, right? There's a lot of resistance above it now. So just pull up another reload zone, pull it from the top. So if you've got reload zones within the reload zones, that's a lot of resistance. And on the opposite as well, if you've got reload zones inside of reload zones, that's very powerful. So it's going to take a lot to get it through this area. Just overlapping resistances. You can just already see the rejection that happened at that level. The Dog funny. Do you think Hex has too many big whales? No. I want the origin address to have more. Because whales, they don't have to sell for money. And they've already probably sold a lot and sit on a lot of, what do you call it? Give me uno momento. We have dogs barking and everything now. Do I think there's too many whales? No, not at all. I mean, if you look at all of the other coins, I mean, centralized ownership is not that bad. Like most of the top coins have very, very large centralized ownership. Do you okay, there are only 1,000 whales, sharks and dolphins, and 50% of them belong to the OA. Yeah, the OA, the top 2,000 wallets are the origin address, the 4-hour chart, I guess. For what is that, for ASICs or Pulse Doge? So this, on the 4-hourly for Pulse Doge, you can just see the divergences here. Price going down. So your top might actually be in already on Pulse Doge. It's probably A6 what you're talking about. So let's just quickly look at it at the 4-hourly. $72, $71. Clear reversal signal here, right? And this engulfing candle just, I mean, both of them, as they're in like the same ecosystem as Hex, yeah. So if you were interested in Pulse Doge, I mean, we already took off here. So this chart is getting a little bit messy, right? If you were really interested in it, you have to wait for it to come down to $4. You can't be getting it up here. This is the nosebleed section. This train has already left at the station, but it doesn't mean it can't go higher, right? Doesn't mean you can't make money. I just like cheap prices, especially down here, and it's given you multiple chances to get back in the reload zone. 1, 2, 1, yeah. If this doesn't come to the reload zone again, which I don't think it's, because this is creating very good market structure, it might just wick in here into the $4 area, but otherwise there's still lots of support at the $5 area, and it's a round number and it's a psychological support. So I don't see it going through here, which means you've missed this thing now. It's pretty much over. And this is very good. Beautiful. These lows being defended. Looks like Pulse Doge forming a triangle. I mean, on the shorter time frames, probably. It's too early to tell. So that looked like a perfect. It was a perfect double top that played out. I mean, on the long term, this is just going to look like this. I mean, we're could flatten it out more. I mean, at the end of the bull run, right, it's just going to look like this and something crazy like that. Because this is exactly how these things look at the bottom when it finally breaks its stop. I mean, you can do a measured move, right? Now, don't go off this analysis. We're just playing, okay? You can see your extensions. The first target is at $13. The 2.618 at 21. See what the 3.618 is at. But I mean, I find it hard to accumulate something for the long term that has performed this well in the bear market, right? What's the weekly saying? It's pretty high. I mean, you probably want it to at least chill around at the bottom for a while. It hasn't had a bear market yet, right? But that's probably that's why it's so good to have a coin launch in the bull. Or in the bear, what am I saying? Probably just going to follow that trend all the way up. So yeah, I'm just the guy that looks at the charts, right? I'm not your fundamental analyst. It does write one big one. PLSD, it's PLSD. Low liquidity and burning supply right now, I think won't take much. So half of it was burned, I think, like a third of it was burned. Does resistance and support equals shorting and long? Don't short at support and don't long at resistance. That's all. Seems like a squeeze to be. Number of holders still infant. ASIC supply currently inflating. More supply coming out as well as miners. End stake of month. I have no idea how the ASIC miners and things work. A positive airdrop. Yeah. They gave it to hexagons. So I'm thankful for that. And good on them for giving me free coins. They can give me some more. So just to summarize, I think this little dump is to create a little bit more room for the Fed announcement next week. We'll keep watching if the chance of a 50% basis point comes down. Look at the 666 here on past Doge. Yeah, so the sentiment in the market is very bearish, right? It might be that we can start taking longs. Like this could have been the bottom, right? But I've said that multiple times before. But I expect us to find a bottom in this area. You guys should go check out my time analysis on Bitcoin. Like this is the area where the bottom would be in. I'm not saying it's the bottom right now. The bearish sentiment is at an all-time low, right? All-time high. The sentiment, the bearish sentiment. So this 1.382 ends in May of next year. So we get a 50 basis point now in December, then the 1st of February probably at 25, then they keep it there for a 25, then in, what is the next Fed announcement? I have it somewhere here. I'm just trying to figure out when we might see that bottom, that last dump, if that last dump is to happen. It's on the interest rates. So we have the Fed announcement now on the 12th, then 1st of February, and then the 27th of Feb. I don't think, it's probably in March itself. So then there is still time, a few months, just to keep it at that level. So what was that? March, right? So they probably stop rate hikes in March, and then they've got 2 months to keep it there at the top, and then start reducing, and then we will see that dump happen. I mean, so we might see the dump by March, by the beginning of May. So by the end of April, we might see that capitulation. And this looks a lot like what happened in 2015, right? Just pull up the log chart so we can go back. We had this double bottom. Let's put this 0.38 here. Okay, so that capitulation happened a little bit after this fib level. And all these levels are simply like a time analysis from the high to the next high. Because Bitcoin runs in these 4-year cycles. Let's pull this. Let's do a little bars pattern here. Let's paste it where we are currently at. Let's see if it looks like this. Now this capitulation wasn't as violent, but you can expect the volatility to have been a little bit more. So we might get our Christmas rally right into June, and then capitulation in June. Yeah, that looks pretty reasonable. Yeah, I stopped following it once the whole miner thing happened. The airdrop was nice. There's so much, there's a lot to keep an eye on, and how accurate has your Fibonacci and overall chart method help you with big swing trades like bear and bull cycle trades? Has it helped you this past bull run? So I come from the shitcoin trader space before I got into Hex, and I mean I traded the whole bull run. So what I do is I accumulate altcoins during this time, because the altcoin season tends to start up here, and I recorded 400% gains on the altcoins. And what I do is I put in small percentages, no more than 5% in any which altcoin, and I get them when they have created. Now we can look at Litecoin, because this is starting to signal where I used to go long, right? So you wait for market structure or a large W like this, and when it finally breaks, you have to wait for it to top out. Then you pull up your Fibonacci tool and you set buy orders at the 61.8, a 1% buy order at the 61.8, another 1% at the 78.6 level, and another percent at the 88.6 level. And as the market comes in to get your order filled, then I set limit orders to sell half on a double. So at 57, double that would be 114. So my first sell order would be at 114, the next one at 228. I'm just using this as an example, right? And when you've got your sell order, your double filled, you pull up your fib to where it topped out, and then you can reinvest half of what you sold back in the 61.8. But you can only do that. No, that was a log scale. You can only do that if you were still below the reload zone in the overall area, and that's this area here. So yeah, I mean, that's where I got my capital to invest into Hex. So I mean, you can easily turn $500 into 100,000 in a bull run with this kind of method. Now it isn't a 10,000x which you could have gotten in Hex, and you have third-party risk, and you have work to do because you have to go in and check every time you get a sell order. And then some of my older subscribers would have remembered that because I live streamed the whole method throughout the 2017 bear market. Yeah, so it's like a penny stock investor strategy or a swing trader strategy. But I mean, you don't do much work. It's not a lot of technical analysis. You simply set your buy orders and you wait. And then you set your sell orders and you wait. It's a lot like Hex and delaying gratification and simply just waiting for the market to do its job. So, and that's probably the most important thing. And it's called the granny style of investing because she is incredibly patient, right? Our grannies have all seen the world pass by them, and by now they know how to firstly delay gratification and to know that things take time, right? And that's antithetical to the crypto market. Most people that invest, or a lot of the people that invest in cryptocurrency, are in their 20s, their 30s, their late 30s, right? And they do not know how to delay gratification. They think they're going to come into crypto and get rich in their first cycle, and that's not at all how the granny investor works. She's waiting. Like, that's most of what she does, is she waits. And yeah, it has proven to be incredibly effective, and I'm going to do it again, but not with a major part of my portfolio. And that's the thing, if you don't know how to manage your risk. And that's with a lot of things in life, right? If you don't know how to manage your risk and you're going to be throwing everything in one coin, you are going to get wrecked. And over time, especially after Hex, like, I've defied that a little bit because most of my coins are staked for the long term. So I'm risking a lot more. But I have done most of my research, and Hex has those really good principles of it's immutable code, it's on the Ethereum blockchain, it's you can't be changed, meaning it's encapsulated, it's off exchanges, and it has proven itself to have 100% uptime over 3 years. Has your style of charting helped you in your journey with Hex throughout all of this in this whole cycle? Yeah, I can give you one example. Like, I had a Hex stake come out. I had a 300k Hex stake come out. Let me just get it right. On this downtrend down here. So I held on to the stake, and I sold it up here at somewhere around the top, I think just about below 6 cents, and I rebought 500k down here. And what I did then is I staked out the amount of T shares, so I kept my amount of T shares that I had throughout the bull market, and now I have that that amount liquid that I actually trade with, but it's still less than 10% of my overall portfolio. So I always the risk management principles are more important in investing and charting. That's the first thing you should be learning, is how to manage your risk. Not to risk more than 5% on any which trade, and know when to cut your losses, But in spot trading, I didn't really work with a stop loss. I just sit underwater, and I know eventually it will go up. But the indicators has probably helped me more than the fib levels. I mean, pretty much you're if you're going off the fib levels right now, you are within value. Like this is where value is at. This is the 61.8. So long-term investors, the granny style of investing is simply a institutional way that the institutions invest. They don't buy up markets. They pull up their fib level, and then they see, right, these are the levels where I'm interested, below the 61.8 and the 78.6 level. And they are dollar cost averaging all the way through. And you hardly ever get these levels in the stock market and the conventional market, right? Well, firstly, I never buy up markets. So yeah, technically it has helped me in that. You never find me buying up markets. I'm accumulating like, and on the shorter time frames as well, you can pull it up here as well. Like I'm not buying these areas. I wait for it to get inside of the reload zone to buy, right? Not to blow my own horn and stuff. It's just I've psychologically programmed myself to wait for the market to come to me instead of chasing. That's what retail does. They feel FOMO and they chase the market. Where I know I'm not allowed to get it up here. I have to wait for it to come down here. So like selling liquid at the top, at the local tops, yes. And I haven't sold the I took some off at 4 cents. I was pretty early on this sell, the previous sell, but I got back in at 3.3 cents. So a small win here, but I've been sitting underwater. I wanted to catch, I was at my computer when, or not at it, I missed it by 30 minutes and I got back in at 32 because I got failed transactions. This got me a bit to FOMO a little bit, this massive wick down here, where I should have just waited for the indicators, the RSI to bottom out, and this happened down here. So I'm just sitting again and waiting for, no, please guys, don't go trade it if you don't have your own strategy, right? You need a plan and to follow it, right? Yeah, so when it gets back up into this area, it might not, because the RSI doesn't look like we are gonna have a major run. But if the RSI is high again, I'll sell a little bit of my position and get back in when the RSI is cheap again. Okay, I think we have covered quite a lot today, and we've come to the bottom. Yeah, good strategy. Thanks for the good questions. It was fun to explain it. Can you fib the all-time high? So you're probably knowing if you can see the all-time high. We can do quickly an analysis on what Bitcoin has done in the past. It won't show you the top, but it will show you areas where you can be taking profits, right? So from the top to the bottom, you can do extensions. Now we almost came up to the 4 point. Let me just put up the 3.618. These don't show you the top, but you'll find a little bit of confluence at that areas, which just means you might find resistance at that levels or support. You can see the 61.8 at 30k. Found a little bit of support here. You can see all of these wicks down here. Then the 2.618. A little bit of support there, lots of support there, and then finally got rejected at that level. and the 3.618 kind of showed you where the top was. That was at 63k, but you would have never known, right? The cycle is going to top out at the 3.618. We can go back to previous times in the 2013 top to bottom. We can see how this played out. Now remember, you're going to get diminishing returns over time. We can see the 618 found support nicely there. That's a little bit of confluence. The 2.618 found resistance, and then when it finally broke out, it came back to, and retested that area support. The 3.618, a little bit of resistance. We made a nice little wick exactly on that level. And then where did it finally top out? 8.7. I mean, this went all the way to the 16.88. Now over time you will see less of these getting hit, right? That's just diminishing returns, right? And then it not perfectly, right? So a strategy which you could be using this is just taking profits at these levels, taking a little bit off the table and not getting greedy, telling yourself like, maybe take a few percentage points off at those levels. And then again, I mean, this outperformed all the way to like, I think there was like 50 or 40. But no one expected these to do that well, right? This went all the way to the 40 extension, right there. So maybe telling yourself that every round number I'm going to take a percentage or 5% off the market. And remember, or even 50%, right? You can sell 50% of coins an infinite amount of times. Like say you've got 10 coins, you sell 50%, then you've got 5. Then you sell another 50% at one of these levels, then you've got 2.5. Then you sell another 50% at the next one, then you've got 1.25. Then you sell another 50%, then you've got 0.75. My maths are getting a little bit disgusting, but you get what I mean, right? Now, I'm not your financial advisor. You need to figure out these things yourself, right? You're responsible to click the buy and the sell button. That's just simply what I do, right? I don't even take the fib levels to sell. What I do is I just sell when my position doubles. And then you've got a free position in the market. 3.6, yeah, that gets exactly a little bit gambly, a little bit degenerate when you start looking at those massive levels. I mean, if we look at what Hex did, this was the first significant bear market or slight bear market that we got. And we saw that it came all the way to the 16.66 right here. But over time, with diminishing returns, you won't get those massive ones again. The next one, I mean, this performed. That's the thing, is this was Hex's first market cycle. So we might only, we'll have to see how it performs in the next bull run. Right, your 1.618 is at 82 cents or 83 cents. Like this is, if you break the all-time high, that is pretty much your first target. And then these higher targets are still to be known. So what you can do is take some off the table at these levels, but always have a moon bag, right? So you can take off some at the 1.618, some at the 2.618, some at the, and etc. all the way up. But that's a healthy thing to do, to take some profit on the way up, just to cover your expenses is an incredibly healthy thing to do. The unhealthy thing to do would be to wait and time the top and miss it completely, because we don't know how high this will go. and say, let's say it goes to the 3.618 at 1.8 cents in the next bull run in 4 years time, then we might say, okay, we've hit the 3.618, we expect diminishing returns over time, we might only see the 1.618 in the next bull run. So yeah, although you can't predict the tops with the 1.618, you can look for something rhyming in the future or diminishing returns, but there will be some confluence at these levels, which means either support or resistance or a trading around that area. Yeah, dollar cost risk, X went full pleb degen, exactly. So with that being said, thank you for watching this video. I hope you guys learned something. Remember, always play from a position of strength, don't get wrecked, keep your own coins, and I'll see you tomorrow. Cheers for now and bye bye.